Have you ever looked at your rental income and felt proud for a moment, and then quietly wonder, why do my bank account still feel tight? That right there, that feeling is the feeling of losing money. Not dramatically, not overnight, but slowly and quietly. I once reviewed books for a landlord who had 3 properties. He said everything's in QuickBooks, so I'm good. But when we opened his report, he had personal groceries inside of his rental expenses, a new roof recorded as an expense, no reconciliation done for over 6 months. In reality, he was losing over $9,000 in just 1 year. Let's break down the 5 costly mistakes landlords make in QuickBooks Online. Reason number 1, categorizing everything as repairs. Categorizing everything as repairs is like using a Band-Aid for every injury, when some situations actually require surgery. The reason why you're categorizing everything as repairs is because you're unaware of the accounting difference. For an example, there's repairs and there is capital improvement. Capital improvements are going to be your funds that you use for things such as your roof, your water heater, or your HVAC. Repairs are going to be anything that you use to fix something that is malfunctioning. Another reason why you may be categorizing everything as repairs so that it can go in your profit and loss sheet. Anything that goes on the profit and loss is immediate tax deduction. Finally, you're probably categorizing everything as repairs because you don't have a bookkeeping system that is structured. It's important to know that if you're categorizing everything as repairs, you run into problems such as your profit numbers aren't right, the math is off, your depreciation schedule gets messed up, selling the property becomes more complicated, and it's harder to show clean numbers to lenders or partners. Do this instead. If you're making improvements on your property and it's costing you $2,500 or more, make sure you categorize that as a capital improvement. Reason number 2, you never look at your balance sheet. In simple terms, that means you're just focusing on income and expense. You're unaware of what you owe, what you own, and owner's contribution. That's like showing a tenant a property from the outside, but not allowing them to come in. How are they supposed to know if it's the right fit if they don't see the outside and the inside? The reason why real estate investors tend to not pay attention to the balance sheet is because sometimes it seems complicated. Real estate education is more focused on income. Ultimately, you're mainly focused on if you made money this month. When you never look at your balance sheet, you can't answer if you're over leveraged, you have enough liquidity, if you're close to full equity. Are your reserves funded? What's the balance left after rehab draw? So here's what I want you to do. I want you to start looking at your balance sheet. And at the minimum, I want you to start managing how much do you have set aside for reserve. Also, manage your mortgage payment loan to see if it's going down. Reason number 3, you don't reconcile monthly. When you don't reconcile monthly, that simply means that you don't have a second source such as QuickBooks Online to make sure that your bank balance matches what you have on your QuickBooks Online balance. That's like paying for food without looking at the receipt. You don't know if you've overpaid, you don't know if you paid the right amount. When you're not reconciling your accounts, you're unaware of what's outstanding. It's possible the check to the contractor hasn't been cashed, or you haven't received your tenant rental, or that ACH payment that you made for your mortgage hasn't posted. When you're not reconciling, your cash flow is wrong, your profits is wrong, and most likely the financial decisions that you make are going to be wrong. So do this instead. Make note of what your bank balance is right now. If you have any expenses that you just made or that outstanding, write it down. Once those expenses clear, what you have on your books should match what you have in your bank. And that's when you know that your bank has been reconciled. Reason number 4, you're not tracking owner's contribution. When you're not tracking your owner's contribution, you're unaware if the money that you have invested is enough for operation. That's like dropping money into a piggy bank and not knowing how much you have saved. This tends to happen because you don't understand equity accounting and you're mainly focused on cash flow. It's important to know when you're not tracking owner's contribution, you're recording everything as income, which is fake profit. This increases your taxable income, and you can't identify your investor partner's equity or explain bank deposits. So here's what I want you to do. When you're trying to decide if this is owner contribution, I want you to ask yourself, did this money come from my tenant or did it come from me? That's how you determine rental income versus your owner's contribution. Reason number 5, you have bookkeeping but no system. Having bookkeeping but no system, it means that you're recording transactions but not in a way that you're confident of making financial decisions. That's like investing in a property and then don't have a process on what to do next. The reason why you may have bookkeeping and no system is because you're unaware of what a bookkeeping system looks like. In which, if you have a hybrid portfolio, this can now become complex and overwhelming. When you have bookkeeping and no system, you're making decisions based on guesses, not numbers. Problems show up late instead of early. You can't clearly explain your numbers to lenders or partners, and you're stuck reacting instead of planning ahead. So here's what I want you to do. I want you to follow these 5 routine basic steps. 1, reconcile your bank account. 2, separate repairs from improvement. 3, track your owner's contribution. 4, review your profit and loss and your balance sheet. And then 5, track large property improvements. If you're a new real estate investor, if you feel unsure about your current books, or you haven't been doing bookkeeping, then this is for you. I offer a financial diagnostics. Feel free to schedule a consultation. I'll review profit report, bank balance, expenses, owner contribution, reconciliation status, and I show you exactly where you stand.